Oh boy, ladies and gentlemen, do I have a show for you today. I've been doing some huge research lately on what's happened over the broader macroeconomic picture over the past 40 years and the big cycle, because we do have smaller cycles of 7 to 10 years, but once every 40 to 50 years there is the big cycle. This is what Ray Dalio's talked about. This is what others have talked about, called the fourth turning. And last time this one thing happened, gold price surged 1000%. And guess what? I've got the data, the facts, the numbers to back it up. This is going to be one of my most important shows yet, and you're going to be shocked with what I've found. So everyone, without further ado, let's not waste any time. Let's get straight into the news, the facts, and the data. Well, like I was talking about, everybody, this is not clickbait. Look at this. During 1970, gold's price was priced around $35 an ounce. But once this one thing that happened, which is about to happen again, we've got new breaking news on this, and also something else is going to happen next year, gold's price surged all the way to around $700 an ounce in 1980. Now, in dollar terms, that's an increase of about 20x, but I'll show you later in real terms, of inflation adjustment terms, it was actually a return of 10x, which is still amazing, meaning if you put in $100,000 at this time, it would have gone in real terms, inflation adjusted, to $1 million. But what we really need to figure out, why was there such a violent rally at this time? What happened? What did the data say was happening during this period? And is the same thing happening today? Well, everyone, surprise, surprise, yes, it is happening to the T. History is repeating itself, and let me prove it. So first things first, what you're probably all thinking about is what happened in 1971 when the US came off the gold reserve. Now that's true, but there was actually many more fundamental reasons why gold's price surged. Let's hit the next chart, everyone. So this here, everybody, is the M2 money supply. Now what happened in 1970 is the money supply went from around 500 billion or 590 billion, and it surged all the way up to, we can go back down here to 1980. It went all the way to 1.58 trillion. So can we see a correlation here, everybody? Once they took us off the gold standard, they were able to print money infinitely. The money supply tripled in 10 years, and this caused gold price to go up 20x in dollar terms. Not so much because gold became more valuable, which it did, but it was because the US dollar lost so much purchasing power. But now you may be wondering, well, what's happening today? Well, look at this, everyone. This is updated to today. So we can see here, around 2011, the money supply was around 9.6 trillion. It hit 10 trillion for the first time in 2012. And then we can see during COVID, the money supply skyrocketed in 2020 from 15 trillion and hit a peak of 21.6 trillion. Now, this did cause gold to surge around 15%, but why have we not seen the big rally like we saw in the past? Well, that's exactly what we're going to get into in a moment, but first, a quick word from our sponsor, Monetary Gold. Now, let's talk about today's sponsor, who I'm very proud to be working with, Monetary Gold. Because we all know inflation's getting worse and it's here to stay. Central banks have been hoarding gold to get away from US sanctions as the US dollar continues to fall in global foreign currency reserves. The Saudis are now even considering selling oil in the Chinese yuan to China because they're very upset with the US right now. So this is all spelling big trouble for the US dollar, inflation, and the US dollar continuing to hold its world reserve currency status. So like I always talk about, you need to find a way to hedge yourself against this scenario with gold and silver. Because look at this chart here, everyone. Gold is up 34% since they started the crazy money printing in 2020 alone. And look at this, silver has gone from around $12.27 an ounce all the way up to $23.72 as I'm recording this, nearly doubling. Now, Goldman Sachs, Bank of America, and Wells Fargo all actually predicted that gold will surpass $2,000 an ounce, but some strategists are now starting to call that gold will hit $3,000 an ounce, and especially the analysts at Kitco News. So if you're worried about your retirement funds being tied up in risky assets like stocks and want to get gold and silver in your IRA and your 401k portfolio, you need to give the good people at Monetary Gold a call before it's too late. Monetary Gold has no fee gold IRA incentives where your IRA or 401k can be in physical gold and silver, and you may be eligible for no fee gold IRA or qualifying rollovers. So give them a call and tell them Michael Cowan sent you on 888 304 3373, and they will give you a complete investor guide for free. And Monetary Gold is a Consumers Affair top-rated IRA gold dealer for 6 years in a row. So again, give them a call on 888-304-3373 or click the link in the description below. Okay, so our next indicator, everybody, you need to look what happened during the 1970s, because guess what? The same thing is happening today, but it's actually worse. So this is a chart of the CPI, the Consumer Price Index, from the 70s to the 80s. Now, what can we see here? During the mid-1970s, inflation actually surged to around 13%. But then what happened, because central banks were very, very silly, and I think the Federal Reserve's about to make the same mistake, but something else more crucial what they're about to do, inflation surged again and it hit a peak of 15%. But what are they telling us, everyone? Inflation today is actually not as bad as the inflation crisis was in the 1970s and the 1980s. Well, let me tell you people, that's a complete lie. I know it, you know it. They know they're lying, but they're still lying, because it's actually a great tool that records inflation the same way they recorded it in the 80s. And we all know that inflation feels more like 15 to 20%. And guess what? If you thought this, if you're feeling this, you're dead on. This is Shadow Stats, everybody. And they've created a report where they actually record inflation the same way they did in the 80s, because the Federal Reserve changed in the 80s and the 90s, because this whole monetary system relies on printing more and more money. It's actually a Ponzi scheme, everyone. They need inflation because there's no way the US government can repay its debt with interest rates going up unless they devalue the debt. Now look at this. What we actually hit a peak in 2022, we actually hit a peak of 17%. So that is actually worse here than the 14.5% or 15% during the Great Inflation Crisis. And guess what? They're now telling you that inflation has dropped to 5%. So the blue line here is the way they recorded in the 80s, and the red line is the current CPI. They're telling you it's 5%. No, people, it is still 13%, and I think you can all agree. So let me quickly recap, because this is a lot to take in, but I'm about to blow your mind. So what happened during 1970 to 1980? Gold price in dollar terms went up 20 times. We saw the money supply triple. We saw there was a great inflation crisis of 15%, but now we actually have inflation higher than it was then. But let me show you another chart that will blow your mind of what gold really did during the 1970s in our money today. So okay, everybody, we can see here in today's dollars, when gold was valued around $35 an ounce in the 1970s, in today, inflation adjusted, that would actually be $280. But what actually happened is gold surged in inflation adjusted terms all the way to $2,600 an ounce. So that's right, gold is actually lower when you adjust for inflation today than it was in the 1980s. We can also see this move was around 1000% return. So what asset class around the world, when you adjust for inflation, is actually lower than the 1980s? Well, that's right, everyone. Gold is the only major asset class that is still severely undervalued. But guess what's about to happen? Something very, very similar to the 1970s when the US came off the gold reserve. Something big is about to happen, because what has been happening in the financial system lately? We saw 5 major banks collapse. We also see what's happening right now. The Securities and Exchange Commission is cracking down on cryptocurrencies and cryptocurrency exchanges. But guess what? Very coincidentally, this is all happening right when the Federal Reserve is about to launch its FedNow payment system. This is going to be a big change for the monetary system. It's also going to be one step closer to getting rid of cash, and one step closer, we're one step away right now from a central bank digital currency. And why is this so frightening? We've seen financial censorship that's been happening. If you have the wrong political opinion, if you question anybody in politics, they will be able to freeze your account in an instant. Also, if you don't believe with their agenda and their policies, your social credit score will be lowered and you won't be able to tap any credit. So everyone, without further ado, let's get into this report on exactly what this FedNow payment system will be. So Bloomberg put out a great report on how the Fed will make bank transfers truly instant. But guess what, everyone? Every time they make things a little bit more convenient, they always take away a bit of your privacy and a bit of your freedoms. Now, before we get deeper into this report, let's hear from the man himself, the Securities and Exchange Commission, Gary Gensler, say that the digital dollar is already here.
We don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments.
So make no mistake, the digital dollar is here, but they're about to start enforcing it on mass scale. So listen to this. How will the FedNow payment work? Well, the Fed will offer instant payments from one bank account to another 24/7 all year round. Sounds great. Because payments occur instantly, customers will know right away if transfers have completed or failed. The person receiving the funds will be able to use them almost instantly. And the flip side is that unlike a check, you can't put a hold on FedNow payment or cancel it. So this is the downside, everyone, and this is very, very worrying. Once you've made that payment, the money is gone for good. And unlike a credit card, there are no reward points or fraud protection. So I don't know about you, but that's very concerning to me, but it doesn't stop there. What are the fees for using FedNow? Well, payments will cost a few cents, but it's not clear who will pick up the tab. Well, guess what, everyone? You're going to pick up the tab. The bank or the customers. With ACH, it's often the bank that pays the fees unless customers making large number of payments. Well, can you sign up? No, you can't. You're not going to be in any control at all, people. As there won't be FedNow consumer app, first your bank will need to sign up to use the system and plug into the back end of its own banking website or app. But will this kill providers like Venmo or Cash App? That's certainly not the goal. Well, I disagree with that. I think that's going to happen once they release their central bank digital currency. The Fed has always said consumers are best served by a competitive payment landscape with multiple players. FedNow will both complement and compete with existing electronic payment systems. I don't know how these private companies are going to be able to compete with a central bank, everybody. Almost 10,000 US banks and credit unions will be able to join and use FedNow, giving the country's patchwork of regional lenders and credit unions a better chance of vying for payments business against China banks and financial technology firms. Now, what was most concerning everybody was this: will FedNow invade my privacy? Well, they said since this will be a bank operated system, the same privacy infrastructure that exists around payment systems will apply. Like it or not, your basic information is all over your non-cash payments, from your credit cards to your bank checks. Would you have a lot of information about you written on them? If you want more privacy, stick with dollar bills. Well, what's worrying? I think once they create the central bank digital currency, you won't have that choice. They're telling you to your face, whether you like it or not, you're not going to have any privacy. Now, the big question, is FedNow a step towards a digital currency? Well, of course, they're not going to tell you, everybody, but they're commenting here. Various commentators on social media have suggested FedNow is a scheme to phase out physical cash or part of a plan to introduce an official government-backed digital currency to replace the dollar. Some politicians, including long-shot Democrat presidential candidate Robert F. Kennedy Jr., has seized on some of those talking points, while Florida Governor Ron DeSantis has railed against the idea of a central bank digital currency in the US. And I completely agree, everybody. But again, if you say this, you're just a crazy conspiracy theorist. The Fed denies this, saying that the new payment service will simply be a faster way to move deposits and that it will continue to provide notes and coins for those who still want to use cash. But for how long? The people most responsible for the declining use of hard currency are consumers themselves. They say commercial payments in cash dropped to about 20% in the pandemic year of 2020 from 30% in 2017. Well, guess what? That wasn't the consumer choosing to do that. That was a lot of these companies saying you can no longer use cash here because cash is too dirty and has too much germs on it. So everyone, make no mistake, this is one step closer to a central bank digital currency. And if we do get a central bank digital currency, the same thing like what happened during 1971 when the US dollar came off the gold reserve, we're going to see a lot of people lose faith in the dollar, just like they did in 1971. The people weren't stupid back then. They knew that the government was about to print money like crazy, and that's why they all ran to gold. Gold has been the only tried and true monetary system that has lasted for thousands of years. And guess what? Every single fiat currency they've created doesn't have a 90% failure rate, a 95% failure rate. It has a 100% failure rate, because these greedy bankers, these greedy politicians, they print the money until it is worthless, and they use it to buy up all the real assets before it does. But I know what you're thinking. Well, Michael, gold has been pretty much flat over the past 11 years. So why exactly has that been happening? Well, let me explain why that's been the case and why this trend is about to reverse because of everything we've talked about. So on this chart here, we can see after the global financial crisis, gold hit a high of around $1,837 an ounce. But ever since then, all the way to around 2018, gold was declining. So do we also have a clue why that happened? Yes, we do. The reason why that happened, everyone, because over the past 10 years, the dollar has actually been in a bull market, or should I say the DXY. The DXY surged all the way from 75 in 2011 to a recent high of 111 or 112 in 2022. But we can see here the trend is reversing, and it's reversing massively. And like we're seeing with Saudi Arabia now wanting to trade oil in yuan, other currencies of BRICS nations are rising up, trying to find other alternatives to trade without the US dollar. We're going to see the US dollar continue to lose its purchasing power. But like I said, the final nail in the coffin will be once they create a central bank digital currency. And if the Federal Reserve flips, Like a lot of people are talking about, that's why all these stock bulls are getting so bullish. If the Federal Reserve pauses now and starts cutting interest rates, not because they think inflation is over, the only reason they're going to do this is to save the banks and save the mega corporations from a financial crisis. If they do this, the US dollar is going to lose its purchasing power massively, just like the 1970s. People are going to lose faith in it and they're going to run to gold. And guess what? It doesn't even have to do a massive move of 10 or 20x like it did during the 1970s to completely change your life. Even if we get a return of 500% over the next 5 years, well, that could be massive, especially when you adjust that for inflation, because I think stocks are going to have a really hard struggle when we enter an official recession. So again, everyone, if you're wanting to protect your retirement and learn more, give Monetary Gold a call today on 888-304-3373. But what do you guys think? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.